If you're a business owner or investor planning to sell a major asset, real estate, a company, crypto, or even collectibles, a deferred sales trust could be your smartest move. The big win? You can legally defer capital gains taxes and decide how and when you access your money. The DST structure is fully IRS compliant and lets you tailor payment schedules to fit your lifestyle. Here's how it works, step by step. Step 1. Before the sale, a DST is created by specialized tax attorneys. Timing is critical, this must be done before you finalize any deal. Step 2. You transfer the asset to the DST. The buyer then purchases it from the trust, the sale proceeds go into the DST. Step 3. Instead of a lump sum, you receive payments over time through a secured installment contract, offering flexibility and tax deferral. Step 4. The trustee manages the funds and works with you on a strategy for ongoing payments and investments. Step 5. Your advisors help build a custom portfolio, real estate, stocks, even alternative assets, designed to meet your goals. Want to learn more? Schedule a free consultation with Reef Point LLC.